G'day folks, welcome back to another update for the S&P 500 and the Nasdaq. Now we're still cautiously bullish, but we're hitting this resistance at the moment on the charts, and I'll go through that in a minute.
Well, it's cautiously bullish, but hitting resistance.
So before you go any further, make sure you hit that like and subscribe button to support the channel, and reference the +1 videos where we do a deeper dive into some of the strategies we speak about. In terms of the outlook, as of late November 2025, the S&P 500 and the Nasdaq Composite, both enjoying a strong run this holiday week, are being buoyed by investor hopes for a December rate cut and robust performance from AI-led tech stocks. The Nasdaq especially remains ahead in 2025 thanks to its heavy exposure to growth and technology. However, with lofty valuations and a heavy reliance on continued AI momentum, the market's resilience increasingly depends on external factors such as central bank policy, global growth and geopolitics. That makes current gains somewhat fragile, bullish as long as conditions stay favourable, but vulnerable to surprise shocks. So looking at the S&P first on the weekly chart, the prices are still above the moving averages, so still bullish on the weekly. Although notice the CCI, the peaks of the CCI have dropped off, so that's a declining CCI highs versus high highs on the price, and that's a bearish divergence. And what I've done, I've marked here a target range. It's a Fibonacci target of at 23-38%. And what we do is we take it back to the low, the significant low before that divergence started. And that would be that point there. And that there is a 23-38% as a minimum retrace. Now, that's assuming the price falls from there. Of course, it could go higher. So don't go placing short orders on it. This could go higher. So long as that keeps rising and the CCI keeps dropping, we're just going to have to readjust that divergence. But at the moment, that's where we are looking at the weekly. On the daily, again, it's hit this resistance up here at 69.10, and it looks like it's retracing back towards that resistance. But notice again, we've got a declining highs on the CCI, slightly declining highs on the price, so there's no divergence there, although there still is a bearish divergence back here longer term for a few months. Now I've drawn a target range for that as well and hasn't quite reached it. Of course, again, if the price keeps rising and that CCI keeps rising, then we're going to invalidate that divergence. Also, from that red arrow there on the hourly, if you're trading on the hourly, and you'd start going long from this point if you're trading on the hourly based on the direction of the daily. And looking at the hourly chart as well, zooming out a bit, again, you can see there going short during that little period, and then starting to go long according to the daily from that point on. Getting in there is a bit early because the daily still wasn't confirming a bullish momentum. So again, I'd like to sort of see the daily confirm before getting in. In terms of the back test, using this as a reference, going short from that arrow there, again, taking short entries when the moving averages of both the price and the CCI are in decline, and closing it out when you start seeing the CCI and the price start to rise. So you would have closed it out there. You may have held a contract or two, but it's better to close it out and take your profits. Again, going short at that point there, both CCI and price declining, and closing it out when you see the moving averages start to increase at that point there. The CCI was giving you an early warning. That was a bit of wasn't quite a bullish divergence, but you can see there the CCI moving higher, and also zooming in there, you can see the price candles also moving higher as well. But again, I like to zoom out, let the moving averages dictate the movements. So again, that's going short, and going long, you would have started taking long entries from that point. So you'd be in long positions at the moment. So looking at the Nasdaq first off on the weekly, again, similar to the S&P, we've got the price still above the moving averages, although I notice the CCI is broken down below the moving average band, and we do have this bearish divergence on the weekly, so just be mindful, and that's the target range drawn for that as a minimum. And I use this 23-38% as a minimum. Of course, it could go a lot further, so that's just a bit of a proviso. On the daily, again, it's hit this resistance up there at 26,120, and it's making a bit of a retrace to the upside, but again, the CCI is broken higher, but notice the price is probably still touching that moving average band. Again, I'd like to see that break higher, and ideally I'd like to see these moving average bands curve up to be more positive about going long. So the daily is cautiously bullish, and on the hourly, and it gets noticed there as well, you would have been going short from that red arrow there, during that little period if you're trading on the 1 hour time frame. And on the 1 hour, again going short from that period based on the daily, taking short positions when the moving averages are in a decline, paying attention to any bullish divergence to get out of any short trades. Again, going short during that little period, closing it out, going short, closing it out, going short, closing it out, and probably starting to get into a long position, as we said. But again, notice the hourly is showing a potential break to the downside, with the CCI giving us a potential, looks like almost a bearish divergence, and the CCI is breaking lower. The price is still above the moving average, but again, just cautious of that moving average on the CCI. Notice here it broke down and then it did actually retrace back up again. So again, it doesn't mean it's going to crash, it just means it might see a bit of a retrace to the downside. Also, we do run a weekly scan each weekend on bullish shares across various regions of the world's markets, and they're available in the Patreon page, links in the description below. And so far on our portfolio, these are some of the shares we've bought and sold recently. Then they've returned 11.57% since the 21st of September this year. So a couple of months of trading, not too bad a return. So again, reference the links in the description below for the Patreon page. Hit that like and subscribe button. Thanks for watching, and see you in our next update.